Joining us now, Eugene Simuni, research analyst at SVB MoffettNathanson. Eugene, how much of this is just how much some of these names had sold off before this point, or is there reason why investors should feel more optimistic about maybe some of these less crypto-exposed names?
Yeah. Well, hi, John. Good to be on the show. Absolutely. There's definitely, we sold off a lot, and now there's an opportunity for an upswing. That's definitely a big theme in Fintech after a very tough period. But each one of these companies did have, some specific factors that have helped it. You mentioned a couple of things about Affirm. SoFi has also had specific factors that helped it. So you do have to look company by company. But taking a step back on Fintech overall, our perspective, cyclical headwinds to Fintech unfortunately remain strong, and we're not out of the woods yet. But the secular story is probably, as strong as well. And so what we are on the lookout for is long-term winners that really will survive this Fintech winter, and it will emerge on the other side as big winners in this space.
And how do you define those? How do you separate these things by category? Because some, SoFi is a bank, Affirm is certainly not. Some other names in the category cater more to small and medium business or even enterprise.
Yeah, absolutely. That's a billion-dollar question here. Look, Fintech is a humongous space, so you really do have to be specific about what you're looking at. We do like, SoFi, Affirm. These are digital lenders, so that's been a very successful category of Fintech prior to 2022. Has been really hit hard during 2022, but we do think there is a secular future for this industry. And what we do look for with digital lenders, we do like companies that are diversified, so that offer multiple different products, become more of a financial services platform versus kind of a one-hit wonder. And secondly, access to low-cost, stable financing. That's critical. That's been shown to be critical, during these tough times. And you mentioned SoFi is a licensed bank now. That's one of the reasons, for example, we like SoFi as a longer-term winner because it does have this access to low-cost, stable financing in form of retail deposit, which, by the way, with Affirm currently does not have.
So does that mean more need to become banks?
Well, that's there's certainly plus and minuses to being a bank. Access to retail deposit is a huge plus. Huge amount of regulatory oversight is a big minus. So each company has to weigh it. And I wouldn't say that being a bank is the only path to being a long-term winner in this space. But in our view, more of these players will need to consider that as they mature. Yes.
How do you look at players like Credit Karma, which is part of Intuit, versus NerdWallet, which is smaller cap and independent, diversifying, as you mentioned, into areas like insurance?
Yeah, look, we like the maybe a bigger concept here. The boom period for fintechs, for digital lenders, et cetera, has created a lot of smaller companies, right, that do specific things. Some of them focus on lending, some of them focused on helping folks budget, et cetera. Credit Karma, NerdWallet are examples of those. Our general view is it's hard for those companies to survive on their own because, offering one product, very tough to attract customers and even harder to retain customers with one product. Easier to do in a diversified offering. And so some of this consolidation that has happened, for example, Intuit acquiring some of these platforms is logical to us, makes a lot of sense, and we expect more of that.
So you expect M&A. That doesn't necessarily make these smaller names a bad investment, right?
No. Well, yeah, that's a good point. Some of this will be absorbed. No doubt, some of them will just die out as the sector evolves. But yes, some of these small names could be attractive M&A opportunities for bigger names, and therefore could be attractive investments. I agree.